This week at the zoo, the Nasdaq index fell another 4.5%, continuing last week's big sell off. Hello and welcome back to the Wall Street Petting Zoo. This is our This Week at the Zoo segment, in which we review the previous week's market news and look ahead to the coming week. I'm Christopher Smith.
And I'm Robert Coburn. The biggest story that drove the stock market sell off this week was that the round two stimulus bill is still stalled in Congress. Wednesday, the market got a little rally after Senate Minority Leader Chuck Schumer said that there was a good chance Republicans and Democrats would manage to cut a deal on a stimulus bill. But that optimism dwindled on Thursday as Republicans announced that they would try to pass a $300 billion bill without Democratic support. And it entirely evaporated on Friday after the Democrats killed the Republican bill in the Senate. Speaking to the media on Friday, Senate Majority Leader Mitch McConnell said, "Regretfully, I can't tell you today we're going to get there. I wish I could tell you we were going to get another package, but it doesn't look that good right now." Marco Rubio agreed in a video posted on Twitter this week. Congress is not going to pass another COVID relief bill before the election. Senator Ted Cruz also said he doesn't expect another stimulus bill. In August, the market ran up 11% on the expectation of more stimulus, so it's now unwinding that gain as investors accept that probably no more stimulus is coming except for the unemployment benefits that Trump has issued by executive order. And even those benefits are currently available in only 20 states and will probably only last 6 weeks. By the way, Trump is emptying the FEMA disaster relief fund to pay for that benefit, while meanwhile the entire West Coast is on fire. So, yeah.
Let's drill into some economic data. There was strong improvement this week in an index of small business optimism as state economies continued reopening nationwide. The jobs numbers this week were pretty poor, with initial jobless claims holding steady week over week at 884,000 and continuing jobless claims increasing by 93,000. The larger story in the jobs numbers is that a lot of temporary layoffs are continuing to be reclassified as permanent. Permanent job losses are now a larger share of the unemployed than temporary ones, so we can expect the labor market recovery to be a longer, slower slog from here. In terms of sector-specific data, there was more good news this week for manufacturers as prices for manufactured goods increased faster than expected. The fastest growing segments were machinery, equipment, parts, and supplies. The price of used cars also surged in August, rising nearly 5.5%. We're headed now into a recession economy where people are going to be buying used rather than new. So it might be a good time to watch auto parts retailers like AutoZone. Prices for groceries fell, so I plan to stay away from grocery chains despite the extremely strong second quarter earnings that were reported by Kroger this week.
Just for fun, Chris, let's also report on the Nikola Motors story from this week. So Nikola Motors is a company that makes electric and hydrogen fuel cell semi-trucks. It's got technology partnerships with a lot of really big companies, including a recent battery partnership with GM. But this week, a short seller firm called Hindenburg Research put out a report accusing Nikola of being an intricate fraud built on an ocean of lies. Among other things, Hindenburg accused Nikola of rolling a prototype truck down a hill and filming it to make it look like the truck was moving under its own power. Nikola founder Trevor Milton declared on Twitter that this was all lies designed to manipulate the stock price and said he was preparing a detailed point-by-point rebuttal. But when the rebuttal was released, all it said was that you'll be hearing from our lawyers. Financial Times spoke with Nikola's CEO, Mark Russell, and asked him about the fake truck rolling down the hill. He replied, "It was built to be a working prototype." They asked him, but did it actually work? After a long pause, he said, "I wouldn't comment on that."
Yeah, and then to make the story even more interesting, I saw this morning that Trevor Milton, the founder of Nikola, had posted a video of himself saying basically that the CEO of Nikola is going to cut off the short seller's balls or something like that. I didn't actually watch the video, but it was pretty wild. Let's talk stocks we watched this week. What are you watching, Robert?
So I was watching Kroger, which reported their earnings Friday morning, and despite beating expectations, the stock price failed to end the week positively on the tailwinds that second stimulus is still in limbo. There was also pessimism among investors due to no official full-year guidance being released. I think due to the current climate, quite a few companies have either revised their full-year guidance or have given up on providing full-year guidance due to the current pandemic. So I think the pessimism that is being felt is not something to be concerned about. What about you, Chris? What were you watching?
Last week, I watched the financial and insurance sectors, especially Allstate, which I think is undervalued right now. Financials and insurance fell about 3% this week, so not a great week for financials and insurance, although they performed about in line with the S&P 500. Allstate outperformed the rest of the sector, however, and broke even for the week, so did pretty well with my Allstate pick. I also watched Intel, which closed the week down about 1.5%. Overall, I definitely had a red week, though not nearly as red as the Nasdaq index. I got to tell you, Robert, it's really paid off to be a value investor this month. My value portfolio is down less than 0.5% for the month since September 1st, while over the same period, the S&P 500 is down over 5% and the Nasdaq is down more than 10%. So value is definitely outperforming for the moment. Let's talk stocks that we are watching this coming week. What are you watching, Robert?
This week, I'll be watching FedEx. FedEx will be reporting earnings on Tuesday after the close. And last time I was watching FedEx, their stock took a hit after ceasing working with Amazon. FedEx and other shipping companies have seen an uptick in shipping, with UPS reporting seeing Christmas-like volume back in June of this year. So although I think UPS is the better value, both FedEx and UPS have seen their stock rise significantly in the last 6 months, with FedEx going from as low as $90 back in March to currently it's up to $230. So, but I still think there's room to grow for both FedEx and UPS with the holiday season approaching and most retailers looking to avoid Black Friday crowds by moving their deals online over multiple dates. I also think a very good metric to preview the holiday season for shipping companies is the TSA throughput data around Thanksgiving. If holiday travel stays relatively low, like it has been since the start of the pandemic, I think that will be a good sign for shipping companies, as that will mean people who normally travel for gift exchanges will have to ship their gifts instead. What about you, Chris? What will you be watching?
Well, I'm watching Merck, and Merck is a pharmaceutical company, and they're soon scheduled to launch a clinical trial for a COVID-19 drug. And I think that could generate some hype around the stock. Merck also announced a positive clinical trial result this week for its candidate drug to treat unexplained chronic cough. Chronic cough is a pretty widespread problem, so this drug could be a big moneymaker for Merck if it gets approved. The drug did have some adverse events. There were people who lost their sense of taste and they ended up dropping out of the trial because they couldn't handle that they had lost their sense of taste, or their sense of taste had changed anyway. But these are not life-threatening adverse events, so it's probably not an obstacle to the drug actually getting approved. It may just be an obstacle to sort of widespread adoption of the drug. So something to watch on Merck. Well, folks, that's all for today's show. Wall Street Petting Zoo is available through YouTube, Podbean, Stitcher, or iTunes, so find it on your favorite platform, and we'd love if you would subscribe and give us a 5-star review. You can also find us on Facebook and Twitter. On Twitter, I post news updates throughout the week. We don't do any advertising for the show, so word of mouth is the only way we get the word out. If you heard anything on the podcast this week that was useful to you, please give us a like, share, or comment on your favorite social media platform. We really appreciate your support. You can also support the podcast financially by clicking the referral link to Webull under our YouTube video and opening a Webull brokerage account and depositing $100. Webull has a great community and powerful analytics tools that make it our trading platform of choice here at Wall Street Petting Zoo. Thanks so much for listening, and we will see you back at the zoo next week.
See ya.